stock of the day, not so small, but it is Guzman Y Gomez. It's pulling out of the US market. That was the big news that dropped this morning. It will cease trading in Chicago immediately, where it has a number of stores that will recognise a one-off impact of 30 to 40 million US dollars. The fast food chain saying the financial performance in the US business has not been acceptable. It is not meeting targeted hurdles. GYG saying Australia remains its core focus and the Australian business is in a solid position with strong growth. The firm expecting to make underlying EBITDA in Australia of $85 million for the FY26, up 29% on the year. Now, here's Chief Executive Stephen Marks talking to us in February when we asked him of any plans to exit the US.
You know, we have a real point of difference in the market. We've tweaked our narrative and marketing a touch, and you know, I've built, you know, it's been 20 years in Australia. You know, we've got restaurants in Singapore and Japan. And the signs I'm seeing here show that the U.S. will pick up quicker than it was, obviously, to build in Australia. So we're very optimistic for the future in GYG. And what with it comes, obviously, financial discipline. You know, we've got board approval for 15 restaurants. We got 8. We got 2 more opening up this year. And we'll continue to build, obviously, revenue. You know, our cost of goods is getting stronger with our supply chain, and we're optimistic for the future here.
Now, that was Stephen Marks, as I said, in February. I know you guys couldn't actually hear what he was saying then, but you said he was committed to the US. They saw the growth potential there. That was only a couple of months ago. Luke, what has changed? Does this turn it around? We've seen the response on the market today, a big bounce.
Yeah, which might shock a few people, given, you know, it inherently looks like bad news, and part of the valuation of Guzman y Gomez was predicated on the potential of the US being such a large market. So why would shares be up today? It was a very heavily shorted stock, and I think a lot of people were there because of the struggles in the US. So with that thesis largely played out for the people who were short, it looks like a bit of a short cover rally to me today. Look, you know, there's a lot of commentary around this decision. There's a lot of people, a bit of a, you know, told you so, because they were trying to sell, you know, Mexican food in probably the most competitive market in the world, and I think a lot of people were calling the strategic follies of that for a long time. So there's some gloating and some back patting going on by people, but I have to admit, this is the right call from management. I mean, you go back and look at the results. They were barely growing in the US. Stores were stalling out. They were throwing good cash after bad, because the Aussie operations are pretty, you know, is a pretty good business as a standalone segment. So they've made the right call, you know, to exit that. And I sort of, you know, on one hand, applaud management and the board, you know, not chasing, you know, not trying to follow through a bad decision just because you've committed to something, you know, as you were talking about there, Andrew, at the start. The problem now, though, for investors is this is now just the Australian business. You've lost that blue sky potential of the US. I know they were talking about, you know, trying to plough forward with other jurisdictions, but they were nowhere near as big. The problem is, if this is just now an Australian story, this valuation has to come down significantly. And the problem is that we have a pretty good peer on the ASX in Collins Foods, you know, has a dominant fast food franchise here in Australia, trades on about half the valuation of what the Aussie business does for Guzman. So I know we've had a bounce today. I think longer term, short, medium term, we now see this start to pull back and start to reflect that this is only just the Aussie operations now, and that valuation has to come back. So I'll say a sell, Andrew. I think if you're there, today's giving you a pretty good opportunity on some short covering to exit the stock. It's not one, you know, I don't mind the business. I like the food and I don't mind the business. Like a lot of people, I thought the US was a very bad endeavour. It's good they're out of there. Probably needs to, you know, shares probably need to be down 40-50% before it looks interesting though.
40-50%, that's given where it's fallen to already. Interesting. All right, thanks, Luke. That's a sell. Claude?
I would also sell the stock. It's hard to add too much more to what Luke said, but I will just give a little background for retail investors who might be thinking of taking an ill-advised punt on this one. This is just a absolute, you know, the valuation of this company has been a joke from IPO until now. It's incredible that it got to where it did, but that shows you the cynicism and power of this like index inclusion play. Because what they did, the company got big enough to IPO, and then a lot of, you know, pretty smart institutions supported the IPO knowing that they could support the IPO. They just needed to hold the price up for a little bit. They just needed to have a little bit of good news flow in order to create enough liquidity and size for this stock to get added to like the passive funds. And then the smart, I don't know, I should have checked the exact date, but the smart instos who had participated in the IPO sold out around the time or shortly after all of that passive money pushed the share price up. So as the passive, dumb money buys in, the share price goes up. You see that in 2024. That's when the smart instos who are like kind of in on it, like not saying there's anything illegal about it, but like they're in on the plan, which is that, float this thing, get it bought by the passive funds and sell to the passive funds at a ridiculous valuation. Like mission accomplished, which is then, of course, maybe the same instos or their mates, the other instos who maybe they didn't get given the IPO stock that they could flip, but they're like, well, I see a way to make money out of this shorting it because it's so obvious what's happened. And so that's why you've had it 15% short or something like that. And so anything that's heavily shorted will have these big covering days like we've had today. But ultimately, of course, the US joke, the US plan was always a joke to anybody. Like, of course, we're not going to sell anglicized Mexican slop into America. But the question is, does Australia have the appetite for that kind of gunk food? And maybe it does, maybe it doesn't. Collins Food is a decent business that's been going around for a long time. So I think it could survive long term, but as Luke says, it's got a long way to go before it's trading in the ballpark of reasonable multiple. I have it on 24, 25 times underlying EBITDA of the Australian business. Underlying EBITDA is a very gammy number. You don't pay 25 times that for a mature-ish business.
Yeah.
Collins is about 10.
Yeah, so more than double the nearest comparable.
All right, well, that's pretty plain to see then. It is a double sell for Guzman and Gomez. I don't know that Luke would be happy that you've criticised his dietary habits there, calling it gunk food. There you go. All right, that's our stock of the day, Guzman and Gomez.